Welcome everybody to the Metals Investor Forum, September 2018. In January, I expressed concern that we were sort of 1999-2000 all over again when the dot-com bubble had come along and marginalized the resource juniors. And I expressed hope that it won't be the same as back then. In fact, the title is Adapting to a New Reality for Resource Juniors, because it is actually worse than it was in 2000, because the dot-com bubble collapsed in March 2000. And we had a couple years of treading water, and we had in 2003 the super cycle driven by China bail us out. So a serious question, and we were debating this in 2015 when we were only in the sort of fourth year of a very severe bear market, is whether the idea of a resource junior is dead, at least in Canada. And even on a Friday afternoon, it's not like a 4:30 already, we're speaking to just somewhere between maybe 2/3 full audience. And you look at this graphic here, and the red, of course, shows the bearish cycles that we had. We thought we had a turnaround in 2016, and it sort of seemed to last until the end of last year, and that's when the cannabis and crypto blockchain stories took control. And the green that you see there is the value traded, and the red is the percent of value traded dominated by non-resource companies on the venture exchange, and the yellow is the resource companies. And there's about 1,100 resource juniors still trading on the TSX Venture Exchange. And you can see what was sort of pretty much even in that 2009-2010 period is now completely one-sided. The money is not going into the junior resource sector. And starting late August, the cannabis sector came back to life in a big way after a huge spurt in the first quarter of this year. Blockchain is not such a big deal anymore because Bitcoin and the other cryptocurrencies have not done very well. But the cannabis story is a serious problem for the resource juniors. You look at the value traded leaders in the TSX Venture, and it's dominated by cannabis and other non-resource stories. And the general thinking is that come mid-October, when it becomes officially legal for recreational sale of cannabis in Canada, that should be the peak for the bubble. So we've all been saying, okay, we need to endure this a little bit longer. After it's legal, the attention will shift to the bottom line, and then people will ask for an answer to the question, well, once you decriminalize a highly profitable industry, how profitable will it actually be? And that usually kills any bubble when you start looking at what is the actual cash flow from your story. But the unfortunate thing that we're seeing now is big companies like Constellation Brands, even Coca-Cola, are looking at this space, and they're moving into these Canadian companies, the leaders, putting in huge capital. These bigger companies like Canopy are acquiring smaller companies, sort of bulking up. And because this is all driving higher, liquidity is cascading down the food chain. Now, we've been there before. Between 2005 and 2011, we had $100 billion worth of hard takeover bids take out 200 resource juniors as part of the gold cycle and the China super cycle, and that money got recycled. We've had about $5 billion worth of money going into resource juniors like Arizona Mining, and now Nevsun is disappearing and a few smaller ones, but that money is not being recycled. Nothing is going down the food chain. And when I realized why these big companies were investing in these Canadian cannabis companies, I came to a disturbing realization. Recreational use is legal in California, and that's 35 million people and an economy, I think, bigger than Canada. and other states like Colorado and quite a few others have legalized it, but it's still illegal at the federal level, so it's very complicated doing anything in the United States. And the Republicans will be in charge of the administration until at least 2020. And now the story is, well, we don't need to worry about profitability of these cannabis companies because they are actually the launch pad for when the United States legalizes cannabinoid consumption beyond 2020. So the whole thing stays in that bubble mode of we're still in startup, we're still developing a market, we're still preparing. The day of reckoning has been postponed for a couple years. So what worries me is that this will get crazier and crazier and suck away the oxygen from the junior resource sector for a lot longer than we would wish. So we have to adapt to this new reality that a momentum type story is going to be taking away our risk capital. Now the chart there on the left, the red is the monthly financing activity by TSX Venture resource companies. And you can see it's not as bad as it was in 2015, but the blue is now clearly taking the money away. And nobody has to really explain what the financial reason is, what the outcome is. You have a psychology of it's potentially winner take all, and who knows where you get taken. If you're not going to be the winner, maybe you get taken out. There's no way to value it the way you can with a resource deposit, which has a finite mine life, a price of the metal, a production rate. You can do a discounted cash flow analysis, and that'll tell you what the upside limit is. And that's where we were in 1999. Now, this is a problem, but it can be dealt with because these classic bubbles are greater fool spirals, and one day they end and massive losses get handed out. In the meantime, the resource sector needs to take what is now its liability and turn it into its virtue, the fact that it does have an upside limit, that you can actually calculate how far it can go, what the chances are of going there, and use this as a pricing model. And I've been doing this for the last 20 years through my newsletter, but I've now made it possible to be done through the Share Collective, where any one of you can go there and visualize the potential outcome, share it in a public space, and then people can see, okay, I agree, disagree, here's an alternative. And you can actually create an externalized expectation, and you can then gamble on what it's going to do in the meantime in terms of investor sentiment, and also what the next round of results are going to be. The cannabis sector, these classic bubbles, don't have that dynamic. In the resource sector, we have two types of bubbles. It's not like we don't have bubbles. We have the kind where you have higher metal prices whose height we do not know where it will stop. And for metals that are actually used for stuff, it's all about macroeconomic demand. And the super cycle that we had start in 2003, it changed everything. All of a sudden, China sucked up a lot more raw materials than the industry was set up to supply. And there we had a really big bull market until the success of the mining companies fulfilled this ramping up of demand, and now it's just growing at macroeconomic growth rates. India is the great hope to be the next China, but that's at least a decade down the road before it hits the kind of tipping point that China hit in 2003. And furthermore, we have all this anxiety in the system right now that the protectionist strategies being pursued by the United States will usher in a global economic downturn, which is not going to help demand for raw materials and therefore the prices. So the idea of higher metal prices driving interest in projects that the juniors own, it's just not anything anybody's considering. And the sell-off in metals in June, and the even worse sell-off amongst the producers since June, the market's treating this as a canary in the coal mine, signaling that while everything else is still ramping up, there is trouble. And I've been sort of thinking, well, does it have to be that way? And there's a much longer description in the Metals Investor Forum magazine that you've got in your bag today, where I explain my thinking. But I'm thinking that the midterm election doesn't matter how it turns out. If the Democrats take it, well, they'll be able to create some degree of sanity. But even if they don't, the Republicans face a potential extinction event in 2020. And so they're going to coalesce and put some brakes on the crazier things. And both groups, the solution for the Republicans is to go back to the one promise Trump has not delivered on, which is to kickstart infrastructural renewal, because America has allowed its infrastructure to decay. It is not great in this category anymore. It needs to be made great again in this area. And the Democrats are not going to say, no, you can't do that. You'll make the deficit go higher. Well, no, they've always been accused of encouraging that. So this will be what I think afterwards will be launched. And all this other stuff that are the priorities right now, such as the Supreme Court appointment, that's going to disappear. And that may turn everything around. This expectation that we're heading into a major downturn will vanish, and the canary in the coal mine will suddenly be seen to be actually still very much alive, and you're going to see hopefully a massive inflow of money to rebalance the resource sector and get us out of this funk that we're in now. The other type of bubble that you can get is when you get a discovery that has huge implications and is also bigger than what everybody's previous wildest dreams were all about. And last year, when I spoke on this podium, I was really excited about what Novo was coming up with in the Pilbara with the conglomerate gold. And unfortunately, that whole story was contingent on them figuring out how to measure where these nuggets ended up in high enough concentration so that you can justify a mining plan, get a permit for it, and just start mining it. It hasn't happened yet. I do think Quinton Henney's model about this being a microbial mat-mediated precipitation phenomenon, and these nuggets have all been reshuffled from the shallows where they got deposited, I think it's correct. It covers a big chunk of the Pilbara Craton, right in the vicinity of underneath that Mount Royal basalt. And there probably are billions of ounces there. But until we figure out where they got reshuffled to, this story right now is on hold. So that could have turned this sector around. Like, who cares that gold isn't going up or that the economy may be going sideways or in a global downturn if you have a fabulous new area play on this scale, potentially repeating what you have in the Witwatersrand. Well, that story for now has not become reality, so that hope is at best on hold. Now, the metal bubbles that entertained us from 2003 on was, copper, obviously, with as the key indicator for the super cycle. Nickel. Now you look at nickel and you see this mountain in the warehouse as a result of nickel pig iron being produced from low-grade, low-quality laterites from the Philippines and for a while in Indonesia, and that's coming back also. We had the uranium bubble, and that was fantastic, but the chances of it happening since Fukushima are way down the road because it's going to be a long time to work down all the accumulated inventory that's in the Japanese utilities. Molybdenum was an example of China deciding to clean up some of its dirtier operations and a simultaneous shutdown of a key roaster, which caused the moly price to go up, and all of a sudden there was a huge scramble for moly plays. And the problem with moly is everybody started mining the moly-enriched byproduct portions of their copper deposits and took care of that, and then the crash happened. And there's plenty of primary moly deposits in North America to take care of any long-term supply deficits in that category. And then the rare earth bubble was the classic one, and rare earths are now cheaper than they were in 2009 after the crash. But that was a huge, great bubble because you had the price, you didn't know where it was going to stop. It was a critical metal. It was part of the green economy. You had all these deposits that couldn't compete against Chinese rare earth prices, all of a sudden being pulled into the juniors and a lot of work done. And that's probably not going to return. And then, of course, we had the silver bubble, which was really parasitic on the gold bubble, the post-financial crisis, fiat currency, debasement, blah, blah, blah type of thing. And that's, of course, come unglued because there is a lot of silver byproduct coming from all those other mines that were put into production as part of the China super cycle. The metals, another form of a bubble driver is when there is a new usage that emerges. And when it combines with potential supply disruptions due to geopolitical factors, then you can get a perfect storm. And cobalt is part of the lithium-ion battery, which is going to be part of the electric vehicle industry for the foreseeable future. And vanadium is part of the long-term storage battery revolution to store the electricity from when the wind is blowing and the sun is shining. And of course, both these metals have problems of vanadium coming, most of it or the largest amount from China and then Russia, and neither of them are America's pals right now. And in the case of cobalt, it comes from the DRC, which has enough cobalt as a byproduct of the richest copper deposits in the world to take care of your wildest electric car vehicle dreams and their cobalt needs. But the Congo is unstable, and nobody wants to rely on that place. So we have a scramble afoot now for deposits at the elevated cobalt prices that we have. Now, gold is the best bubble driver. And it's unfortunate that everybody keeps watching the price of gold. Where's it going? Is it down today? Why isn't it going up? And of course, the audience that loves gold has been lured away by the siren song of cryptocurrencies. And so you don't have these people excited about gold anymore. And gold right now is lower than it was inflation adjusted from $400 in 1980. It should be now $12.75, and I guess it's worked almost good as an inflation hedge. I would like to say that if Trump comes through with his idea of inflation adjusting assets for capital gains, this would be really good for gold, because right now, if you sell gold that you bought at $400, you end up with $880 after tax, which is not a very good thing. But if you get to adjust it to $12.75 and sell it, you might even get to claim a capital loss to offset other profits. For the other equities, it'd be a very bad idea. But allowing gold to be a proper inflation hedge rather than this thing that they punish with a collectible capital gains tax, that would help at least the gold market in the United States a lot. What's hurting the perception about the gold sector now is we see rising U.S. interest rates, and we see rising U.S. dollar as people fear that these strategies that Trump is pursuing are going to create a global economic catastrophe that leaves the United States as last man standing, in which case you want to own U.S. dollars, not gold or anything else, because as all these other things melt down, gold's going to be sold because there'll be a liquidity crisis, and gold is something you can't sell. So, which is why nobody is getting really excited about owning gold, even though right now you actually should be, because the geopolitical process that's in play, no matter what the United States does, it's not going to change the fact that it is only 10% or 5% of the world's population, and the rest of the world is emulating the United States' methods, but they're doing it with partial central command, so they have an edge on the traditional capitalist-based economies where corporations have to relate all their decisions to the interests of their shareholders, and therefore long-term strategic decisions cannot be made. So when you don't have metal price drivers to really get excited about, except in isolated pockets like vanadium and cobalt, and you still want to stay interested in resource juniors, you have to look at discovery plays. Now, the days of the area plays seem to be gone. We're just not seeing them the way we did in the 80s and 90s. It's more individual companies go nuts, like we saw Novo go nuts last year, And as we are now seeing Royal Nickel go nuts as a result of these golden boulders that they have recovered from the Beta Hunt mine, also in Australia, also in Western Australia, except at the southern end of the continent from the Pilbara. So this is now the hot story. And just to give people here who may not have heard about it, this thing was trading below a dime, had its 400 million shares out, was loaded up with debt, 38 million related to this mine they bought in order to mine the nickel that was left behind and some of the ratty gold that was beneath where the nickel deposits are located. And they were trying to sell this all year to some sucker, just get rid of it and get rid of that 38 million in debt so they could focus on their Dumont nickel project. But in September last year, the geologists came across coarse gold deeper down in the mine, which was below where coarse gold has traditionally been found in the Kambalda camp, which is right at the interface between the komatiite lavas and the older Lunan basalts, where these Kambalda-type rich nickel deposits existed. And there seemed to be something where these shears came up. You would periodically find these fantastic things. Whatever was found deeper was nothing like that. But they found something interesting, and they developed this model that this sedimentary horizon in which this very golden boulders were being found was actually serving as a special chemical sponge that caused the gold to drop out of the fluids that were coming up the shears and dropping themselves out everywhere else. And they've been working to develop this model, racing against the people upstairs who were being pressured to sell the asset and pay back the creditors, when on Father's Day in Australia, they came across these boulders and got what at least for now looks like validation for the model. Now this is a fascinating story because the way it sort of works is they have a system like this, a fold, and within this fold, there's like a thin horizon that's this pyritic shale horizon. And most of the drilling, extensive drilling, is only 100 meters deep. But there's these shears, 4 shears that come through here. And their model now is that where the shear intersects this pyritic shale horizon, it's not very thick, you get incredible enrichment. And the new model is, well, how much of this is there? And they say, well, we've got these 4 structures, roughly 2 kilometers long on our ground. So that's 5 to 10 kilometers of structure. And these deposits are going to be almost like have a pencil geometry tracking along the axis of the anticline of the fold. And so now the model is go in there and drill and vector in on this and look at the alteration patterns and come up with a way of where did these super 10,000 to 20,000 ounce per ton enriched pockets exist. And that's what took the stock up to $1.18 the other day. It's now the heaviest trader. And it's much better than the Novo play, because with Novo, until you had a method to measure, it was all just this big fantasy. This is hydrothermally emplaced in situ mineralization with geological controls that you can figure out with old-fashioned core drilling, a lot of structural geology, a lot of alteration studies and vectoring and so on. So when they get going on this, we have a year before we know whether this was just some little local freak phenomenon or that it is something substantial, that there may be a couple million ounces, maybe more, that with a lot of drilling you'll be able to home in on. Because it's already a mine, it's not like you need to wait 6 years to permit it or anything like that. And for the share collective thing, somebody has gone in there and done 2 scenarios. They've done one where, what if we end up with an average of 5 million tons of 4.5 grams and continue to process it at, say, 1,700 tons per day? And then the thing ends up having sort of an end of the value of 34 cents, which nobody wants to hear because the stock closed at 89 cents today. Another scenario was, well, what if these pockets do repeat and we can find them, and there's like 500,000 tons of 150 gram gold, 5 ounce gold, and we mine it at just 200 tons per day and ship it directly to the smelter as direct shipping ore. What's that worth? Well, that's worth $2.80. So where does this fall into? Now, what this market needs is a framework to be able to look at the data as it comes through, crunch numbers, share it in a public space, and then see what happens next. And this is why I'm paying close attention to Royal Nickel's Beta Hunt project, which they've now decided to keep 100% and not punt, because this is a place where you can't rely on higher gold prices to bail you out. You can use rational thinking and use the limitations that everybody hates and sort of kills bubble potential to still do a lot of trading and gambling in the resource sector space. Because this is really high grade, its replication implications for other juniors are, okay, forget about finding some open pittable blob of 500 million tons of 0.4 gram gold or 3 gram gold and hope to mine it and pray that gold goes up. Let's go revisit these old camps, find the high grade in it, and demonstrate that we have a high grade ounce that can be readily mined even if gold drops to $800. So that's, if this doesn't fizzle out for some very obvious reason that isn't obvious right now, this could become the thing people say, we have something similar. We're not talking about some billion ounce thing here. We're talking about very high grade, several million ounces here. And if you're coming up with like, what's 5 ounces per ton? That's $700,000 a ton rock value or something like that. Whatever, but it's extraordinary compared to the costs of mining this stuff. So now I'm going to sort of shift more to the companies that are up on this, who are going to be speaking ahead of me. And a theme that I've been developing is one of back to America. Now, America's not going to artificially impose higher metal prices on everything to make existing deposits be in the money and worth developing. They do have a problem of security of supply because, as you can see, the blue there, they only dominate in one metal, which is, I think, beryllium, which isn't that important. And China and Russia and other places, they dominate the supply. So if America does a isolationist strategy and alienates the rest of the world, it's going to have to start thinking of, we are a rich country, well endowed with resources. It's time to start developing our own resources. And we have finally hit the limit in terms of regulation, permitting obstacles. This not in my backyard nonsense, it's coming to an end. The Chinese, tired of being the toilet for Americans who get all their fancy gadgets and things made from materials that are mined in other jurisdictions where there are no environmental rules. But the extremity of the rules in the United States, the pendulum is now going back. So we're going to be facing a more favorable environment for getting exploration and mine development permitted. I mean, it's not like we're going to China standards and just going to trash the environment. That's not going to happen. But we're going to see a relaxation, and it's going to be coupled with this idea, it would be good to find more resources that work at the metal prices that we do have. And that means exploration. That means going undercover, gutsier, riskier exploration. And 2 companies that are here, both of them are bottom fish recommendations of mine, Renaissance Gold and Nevada Exploration. Nevada Exploration Inc. is now also a recommendation of Gwen Preston, and they will be presenting in her session tomorrow. But both of these companies are looking for big undercover deposits in Nevada. And Nevada is America's biggest gold producing state. It also has one of the highest, perhaps the highest density of gold mines when it comes to world-class gold districts. Renaissance Gold will next month start drilling at the Ecru project a couple of risky holes that may need to go as deep as 1,000 meters, targeting the lower plate, which is just north of Pipeline, which is part of the Cortez trend. And it's funded by S2 Resources. We have a sort of an Australian invasion happening where the Australians are coming here and taking advantage of the feeble-minded North Americans and their bad attitude towards the resource juniors, and they're doing pretty lucrative deals to farm in on shots that they think, wow, if we find a Cortez Hills, that's a $2 billion prize. And of course, it'll be underground mine, but Cortez Hills itself is underground mine also. And in the case of Nevada Exploration Inc., they started drilling this week on their South Grass Valley target where they know they have lower plate not too deep. They have a gold and groundwater anomaly. Without that, there wouldn't be any special reason to waste a bunch of money drilling into that valley. If they start to hit something, it becomes a proof of concept and a key for unlocking the hidden potential of Nevada. So this is kind of a, if the juniors start finding undercover big deposits, there's no reason that they alone found the only one or two deposits of this nature. Nevada goes live and the risk capital will start to come in. And Wolfden Resources, it's again part of the Back to America. Maine, last time any serious work was done there was in the late 80s, and nobody did anything because this place is all full of forest and environmentalists. But in 2013, they decided to start to revamp their mining law, and they concluded we don't want open pit mines. Okay, fine. But we now have a protocol in place for permitting underground mines. And this deposit, which was abandoned at the end of the 80s, Wolfden was able to pick it up with financing from Altius, and it's a high-grade polymetallic VMS system where they're looking for 15% zinc equivalent, and zinc continues to be the one base metal out there where you look at the warehouse stocks, and unless China turns on the taps in a very big way, it's going to be a strong base metal. And of course, you see most of it, much of it, 40% does come from China. In fact, Trump was going to ban zinc imports until somebody said, you know, that would actually hurt us if we did that sort of thing. But looking for projects like this, you know, maybe Canadians don't care about the exploration projects in the US because they have this memory of like hideous permitting obstacles. But for Americans, looking at competent exploration companies, exploring good projects in America, to me, that's almost a no-brainer, regardless of where you are in the political spectrum. And a triple strategy. Serengeti Resources, which has been here several times, Renaissance and Wolfden are here for the first time. They are in the midst of a pre-feasibility study. We won't see any earth-shattering news until the middle of next year. They are both a discovery exploration junior generating prospects from scratch, and also they have this advanced one which they did generate from scratch about 12 years ago. So here you get optionality on copper and gold in case that canary in the coal mine is in fact alive and well and only pretending to be dying. And from the Addy and projects like Croy Bloom, you have the S-curve potential of discovery. So here with this one, don't expect anything to happen in a big way in the short term, but watch out. And then finally, there is actually a place where you can have a bubble in the junior resource sector that follows classic criteria. And niobium was something that you could never really use very much because it was 0.2% or so. And then Arasha was found at 2.5%, 500 million tons. And CBMM, over 40 years, built this into a $2.5 billion a year market. And they pretty much dominate it. Scandium is going to do this in 10 years. And the psychology is such, if you're the first mover in that, you're potentially winner take all. And because there's no market for it, it is a market development story like cannabis, like how big can this market grow? So this company's been plagued by the question of funding 100 million CapEx. And I've created a model which shows that if you finance at 60 cents, you can expect in 3 years a price target of whatever, 80 cents to $1.60, depending whether you use a 5 or 10 for 1 multiplier. And while the stock was languishing at 15 cents, he said, this is a dog. They're going to issue 1 billion shares or whatever at a dime. But the stock traded at closed at 28 cents today. It's trending up. The company has developed a guerrilla marketing strategy, which is going to solve the off-take chicken and egg problem where how do you get capex without having offtake agreements guaranteeing a market for what you're going to produce, which is going to be 3 to 4 times more than the world already produces only from non-scalable byproduct sources. So here are the companies that I all think are potential future suppliers in the order that I think they will come on stream, and that's substantial. This is not like Arasha with an niobium where one deposit just blows away everything else. These deposits are all very similar. They're just at different stages of development. And for the end users, they don't have to worry about some crazy thing happening in Brazil that shuts down their supply, which is why I say the adoption is going to be a quarter of the time to get to $2 billion worth of demand. And these companies are all going to be part of it. And as this starts to unfold, we will have a scandium bubble. So here's an example of where it all comes from, and or where it all can be used. And there's dozens of things it can be used from. And this is the key. It's not just from some aerospace thing. It comes from many. And the company is chasing a strategy of targeting many different smaller users and developing the offtake that way, securing a bunch of small, few ton type deals, which in aggregate take care of their output. And then they can scale up, expand from internal cash flow, because all of these, when they prove that this chemical camp performs as promised, they all are going to expand their offtake substantially. So they have the expansion already in place. And here's how I see the future. They published this bubble chart, which shows early adopters, late adopters, the relative size of the potential markets. I turned it into a 10-year timeline by reverse engineering their graphic. And this is what I see evolving. And in 10 years, those 8 or so companies that I identified, they'll only supply half of this demand. And the reason Scandium International has potential to become a bubble company is because they're downstream producing master aluminum scandium alloy, so they can deal with all these customers directly, and they can also aggregate the others, so you have a winner-take-all type of strategy. So I'm just adapting to the new reality of not having higher prices to bail us out. Stock picking sucks in this environment because you can pick a stock like Peregrine and end up having all the fundamentals work out, but it gets sold off and disappears without any reward for the fundamentals. So it's kind of hard to stay in this business and continue slogging away. So I've changed the whole approach. I've developed this map interface. I want to see what's happening now. Where's the next beta hunt coming? Who's getting results? Home in on that. I'm going to reduce the price of it in the new year substantially. And this map interface is the big thing I've been working on. When you click on one of those things and it's free, you get this little window that pops up. You can see the chart price. One of the links goes to my profile. That's been free for a while. It's going to be restricted permanently, so are all my comments. You get a second link which goes to a free corporate profile, which is a stripped down thing, where you can at least find out a little bit more about it. And if there's a news release, the most recent one, it's there. You can go directly in there. So I found that I didn't have time to go through boring lists and try and find stuff I didn't know about that was starting to happen, because when things do start to happen, they do happen fairly quickly because this market is starved for action and it does gravitate to it. So I'm shifting the whole focus to that. And there's 27 companies here. I've created a dedicated page to them. It's your sort of pathfinder to researching them. It'll stay up until the next conference, and I recommend you use this tool to stay on top, because I think this is a fantastic collection of companies that have troubled to present even though we are in this horrible bear market. And that's it. Thank you.